Tonight we're going to talk about a topic that's on everybody's mind, especially when you go in to fill your car with gasoline or buy home heating oil for your house or put diesel in your truck. And that's why are fuel prices so high? The key to understanding oil price economics lies in three areas. One is just basic supply and demand. Two is the politics in the world, especially in those countries that control our oil supplies. And lastly, money markets and hedge funds have an awful lot to do with what we pay for a gallon of gasoline. This is a breakdown of where your dollar goes when you buy a gallon of gasoline. 58% of the dollar goes just for the crude oil. 15% of that dollar goes to federal and state taxes. 17% is taken up by refining the oil into its different products. And finally, 10% of the dollar goes to distribution and marketing to get it to the pump. There are multiple and hard to predict uncertainty prices today. One of the things that's really hard to peg are the decisions that are made by oil producing countries. As this presentation is put together, OPEC countries have come together and they're trying to figure out how high to keep the price of oil. National oil companies, primarily in the Middle East, control 75% of the world's oil. Almost 1 trillion barrels in reserve are held by national oil companies. The day of, quote, big oil, setting the price for crude oil and setting the price for products is long gone. Another factor that affects fuel prices is refinery capacity. There has not been a new oil refinery built since 1975, and so existing refineries have been pushed more and more to put more product out with the same equipment. This increase in utilization has had its effect that there is no makeup room in a refinery. If a refinery or a unit in that refinery goes down, it is very difficult to make up that capacity. And this lack of cushion in refinery capacity has shown up very recently due to weather. This is a chart showing electrical outages in the state of Louisiana after Hurricane Gustav. Petroleum refineries were shut down prior to Gustav hitting land. The refineries stayed down after the hurricane hit in many places because of a lack of power to be able to start them back up again. And even after the gasoline and fuel oils were produced, it was very hard to transport them because there was no gasoline stations, no filling stations to power the trucks, and no electricity to run the pipelines to get the product to the customer. Another factor that affects fuel pricing is the value of the U.S. dollar. Just since April of last year, there has been a 10% decrease in the value of the U.S. dollar. Since all crude oil in the world is pegged to the U.S. dollar, a decrease in the dollar means that it takes more dollars to buy that barrel of oil. One factor that has a great impact on fuel pricing are the money markets. In any given day, the United States produces 9.2 million barrels of gasoline, but the total demand is 9.4 million barrels of gasoline, with the excess being made up by imports. But 97 million barrels of gasoline are traded on the mercantile exchange, 10 times more than are processed in our refineries. For diesel fuel, it's about the same. 4.1 million barrels are produced every day, 4.2 million barrels are needed, but 77 million barrels are traded on the Merc every day. The daily crude oil input to U.S. refineries is almost 16 million barrels a day, but almost 400 million barrels of crude oil are traded daily on the market exchanges. In an October 2007 article in the Wall Street Journal, it was stated that the financial players who have piled in mass into commodities trade in the recent years have made oil markets more unpredictable. Some are simply betting that all oil prices will rise over the long term. Others are pouncing on pricing anomalies as short-term trading opportunities. Many of them move in herds. Factors other than supply and demand are now impacting the price. We now have to factor how the speculators are going to affect the market because they have different priorities in managing their portfolios. And Wall Street has more to do with what we pay for our fuels than we think.